Imagine this. You skip filing your taxes 1 year, thinking it is just a temporary delay you can fix later. Maybe you were busy, maybe life got messy, or maybe money problems made everything feel too stressful. You tell yourself, I'll handle it later, and for a while, that excuse feels easier than facing it. Then another year passes, and before you fully understand it, another tax season is already gone. Then another year comes and goes, and the problem no longer feels small or simple. Before you know it, 5 tax seasons are gone, and the missing returns have piled up quietly. And one question is stuck in your mind, because now ignoring it no longer feels safe. If you want to learn more about financial mistakes to avoid, like this video and subscribe now. Let's follow Daniel, a regular American taxpayer who never planned for things to get this far. In year 1, he misses the filing deadline and assumes he can catch up soon. He thinks I'll file next month because one missed deadline does not seem impossible to fix. But next month becomes next year, and the unfinished tax return stays untouched in the background. By year 5, he has a box full of letters, old forms, and unopened envelopes. But not filing does not make taxes disappear. It only hides the problem for a while. It usually lets the problem grow quietly, month by month, without Daniel seeing the full damage. In the first year, penalties can begin if Daniel owed tax and missed the filing deadline. If Daniel owes tax and does not file, the IRS may treat the return as late. The failure to file penalty can start adding up, and this penalty can become expensive quickly. Many people think I can't pay, so I won't file, because they feel trapped. But that is usually the wrong move, because filing and paying are two separate issues. Filing late is bad, but not filing can be worse because it creates a bigger compliance problem. Because the penalties can snowball over time, a small delay can turn into a much larger bill. The bill becomes tax, penalties, and interest, not just the original amount Daniel owed. And interest can keep growing until paid, which means the balance may continue increasing over time. Daniel's original problem is now much larger than it would have been if he acted earlier. By year 2, notices may start arriving from the IRS about the missing return. These letters may ask why he has not filed and what information is missing. The IRS receives income records from others, even when Daniel does not file his own return. Employers, banks, and clients report income through forms like W-2s and 1099s. So the government may already know he earned money, even if Daniel stays silent. Daniel panics and stops opening the mail because every envelope makes him feel more nervous. But IRS letters are also instructions, not just warnings or scary government notices. They explain the issue, the tax year involved, and the next steps Daniel should take. Ignoring them removes his chance to respond early, correct mistakes, or avoid further pressure. And silence usually makes the situation worse. By year 3, another problem appears that many people do not think about. Daniel may not even owe money for every year he failed to file. Maybe too much tax was withheld from his paycheck, especially if he worked a regular job. Maybe he was actually due a refund, but he never filed to claim it. But refunds have time limits, and the IRS will not wait forever. If he waits too long, the refund may disappear, even if it was legally his. Someone could avoid filing out of fear, thinking they owe money they cannot pay, while the government may actually owe them money, but they lose it by waiting too long. That is one of the costliest mistakes, because fear can turn a refund into nothing. Waiting can cost more than people realize, especially when deadlines and penalties are involved. And after the deadline, it may be too late to claim money that was once available. By year 4, the IRS may step in and begin estimating the missing tax return. If Daniel still has not filed, the IRS may not simply wait forever. The IRS may prepare a substitute return using information already reported by others. This is not the same as proper tax preparation by Daniel or a tax professional. It may use only income information already reported, such as wages or 1099 income. It may not include all deductions or credits Daniel could legally claim. So the estimated bill could be higher than the bill from an accurate return. If Daniel does not tell his side, the IRS only sees part of the story. The estimate may not favor him because it may leave out important details. He may receive a serious notice explaining the proposed tax assessment and his response options. And now the situation becomes urgent because deadlines to respond may be limited. By year 5, collection risk becomes real if the tax has been assessed and remains unpaid. If tax is assessed and unpaid, Daniel's problem moves from filing trouble into collection trouble. The IRS may move into collection to recover the balance it believes Daniel owes. This can include a federal tax lien, which is a serious legal claim. It can also include a levy, which is more direct and more financially painful. A lien is a legal claim against property because of unpaid tax debt. A levy can take money from wages or accounts, depending on the taxpayer's situation. These actions usually follow notices, so they normally do not happen without warning. But if Daniel ignored the mail, he may have missed those warnings for years. It may feel like everything happened suddenly, even though the process was building slowly. Really, the warnings were building for years while Daniel avoided the letters. Responding early gives more control, more time, and usually more options. Now, could someone go to jail for not filing taxes for 5 years? This is the question people fear most, and it deserves a careful answer. In most ordinary cases, the IRS wants compliance before anything else. That means filing returns and paying what is owed, or arranging a legal payment solution. But willful failure can become criminal, especially if someone hides income, uses fake records, or tries to deceive the IRS. The key word is willful, meaning the action was intentional, not accidental. But after 5 years, get qualified help before making guesses or ignoring the issue longer. Do not panic, but do not ignore it, because silence is usually the worst strategy. Here is the good news. There are options once Daniel decides to act. If Daniel cannot pay everything at once, that does not mean he should do nothing. He may be able to request a payment plan and pay the balance over time. In some cases, other relief may be available depending on his financial situation. If paying would block basic living expenses, collection may sometimes be delayed. But many options require filing first because the IRS needs current tax compliance. So the first step is knowing the real number, not guessing the worst-case scenario. That starts with records, not guesses, fear, or random estimates. Then each missing return can be prepared using the correct income and expense information. Filing is how the problem becomes measurable, organized, and possible to solve. Daniel gathers W-2s, 1099s, receipts, bank records, and old tax documents. He may also need IRS transcripts to see what income was reported under his name. A tax professional can help review the years and prepare the missing returns correctly. Each missing return should be prepared carefully because small errors can create bigger problems. If a substitute return exists, it may be corrected with Daniel's own accurate return. Daniel may claim legal deductions and credits that were missing from the IRS estimate. The balance may be different than he feared once the correct numbers are filed. Some penalties may be reviewed for relief if he had a valid reason. Then he can deal with payment options based on the real balance due. But nothing improves while returns stay missing and Daniel avoids the situation. So, what happens after 5 years if someone still has not filed? The IRS may send notices asking for missing returns and explaining next steps. Penalties and interest may grow, making the balance larger over time. Refunds may expire, even if the taxpayer was originally owed money. The IRS may file a substitute return based only on information it already has. Collection actions may become possible if tax is assessed and remains unpaid. The worst strategy is silence. File, fix, and move forward before year 6 makes it harder.